All right. You are live. Woohoo! Woo! Double whoo! Uh-oh. Start recording. All right. Let's get rolling. Uh-oh. Users here. I have no idea what name that was. Pravana. David. What's happening? Charles. What's going on? We're just getting ready to rumble. Caden. Caden, what's happening? David. Caden, cool beans. All right, this is James from Dividend Stock Talk, brought to you by the 10-Minute Trader, where I invest in dividend stocks for weekly cash flow, take you along for the ride for a safe, predictable, and consistent 1% per week using nothing but pre-qualified dividend stocks, and those are companies that have increased their dividends to their shareholders for more than 20 consecutive years. We're getting ready to get started. Let's jump on in and let's get moving. We're going to start up with today's date is the 26th of August. We got 1 week left to go and we're officially done with the second month of the third quarter, which means we are in week number 9. Should I buy Albertsons before the merger? Brandon, I have no idea whatsoever. Ace, oh my goodness, don't be starting that crap like you did last time, Ace. Just saying, don't want to hear it. Brandon, I have no idea what's going on with Albertsons. But let's take a gander at it and see what it looks like. Albertsons. All right, Albertsons a monthly optionable stock, which means they don't have weekly options. Brandon, what's happening? Now, I really don't like companies that have monthly options because you can only do it 12 times a year. 12 times a year only comes to around 12 to 24% per year. But if you're okay with that, not a problem. Hakuna, here early today. Way to go. All right, so let's just keep going. Find out where we ended up last night. Let's take a look at Johnson & Johnson. Now, Johnson & Johnson, hey, how you doing, Hakuna? Johnson & Johnson is a dividend king. They've been in business for over 100 years. Do you prefer companies that pay dividends 12 times per year? No, I don't. That was simple. That was quick, right to the point. Just because they offer a dividend every month doesn't mean they are better. Richard, how's it going? Either way you look at it, Hakuna, I like companies that have consistently increased their dividends. Do I really care how often they pay their dividends? Should I buy Albertson stocks options for 2026 for it to hit $30 for $67? I really can't tell you that one. Uh-oh. Poopy pee hands. Poopy pee hands. I don't know. Poopy pee hands. Whatever. Oh, would I buy Alibaba? Actually, I did buy Alibaba a while ago, but I don't have any at the moment. But let's take a gander at it. How do you like SPY for the rest of the year? Florida single guy. I don't like spiders at all. Why did you skip my question? Poopy peepee hands. Why dividends versus regular investing? I tried regular investing once, and is there such a thing called regular investing, and how do you categorize regular investing? Okay, for me, regular investing is buying something on Monday, selling it on Friday, getting my 1% per week. That's regular investing for me. I've been doing it for the last 15 years. I don't come from a traditional family, okay, so I have no idea what regular investing is. What is it supposed to look like? You buy a good company, you make a profit off of it. Great. Move on to the next one. You buy a good company, make a profit off of it, move on to the next one. I have no idea what you mean by regular investing. Filtered to protect blah, blah, blah. What do you think about Ford or Spirit Airlines to buy in your opinion? Oh. View request. Oh, Hakuna, you want to jump on and say hi? Well, let's take a gander. Hakuna from Sweden is going to jump on and say hi for a little bit. Let me turn up the volume so people can hear you. There we go. All right. I don't know if I can hear you over here on Instagram. I don't have any idea how that works. Hey, Hakuna, how's it going over there in Sweden?
It's fine, thank you. Yes, it's a little bit late. It's 3:15. But so yes, I wanted to take a gander. Yesterday you said that you prefer companies that pay 4 times per year. But and now I asked you about 12 times, and then you said that is not the most important. But I assume if they meet all the other criterias, and if you're going to choose between 12 times and 4 times, then you would pick 12 times. Is that correct?
No. It always comes, Hakuna, it always comes down to the,
Just 1 second. But I mean, if they meet all the other all criteria that you put up, and you can so otherwise it's no difference if you pick 12 times or 4 times. Wouldn't you pick the 12 times company then?
it all depends on the numbers. Now, what I mean by that is, what am I buying it for? What am I selling it for? What profit am I making? How consistent? If they meet all the other parameters, the dividend doesn't really have anything to do with it whatsoever, other than telling me when to buy it. Okay, remember the calendar? The calendar tells me when stocks are going to have their dividend dates. Okay, so if the stock is telling me when it's having its dividend date, they consistently increase, great. Well, I jump in, get my profit, and jump on out. I'm not looking for the dividend itself. I'm looking for consistency, predictability, simplicity, and safety. That's what I'm looking for. So it always, always, always comes down to the numbers. Okay? That make
I hear you, but you also said the reason why you focus on dividend stocks, that is because 2 weeks before the dividend, the option or the share usually increases in price.
correct?
So then I'm thinking, if they have a dividend payout several times per year, and if you don't lose the shares the first time, so you're sitting with the shares, then it can be an advantage that they have dividends every month.
Well, all right, look at it this way. Let's say you got company A, B, and C. Company A tells Company A pays dividends once a year, and they have a 5% yield. Okay, fine. It's going to have a higher dividend. Let's say Company B pays a dividend every 90 days or every quarter. Let's say their yield is 5% also. Well, their dividend is going to be 1/4 of the company that pays once a year. Now, let's say you have Company C. They have a 5% yield also, but they pay every month. Now, their dividend is going to be 1/12 of Company A and 1/4 of Company B. The yield is the exact same. If they increase their dividends consistently, the exact same. If they have weekly options, the exact same. And they have, let's say hypothetically, the premiums giving a 1% on a weekly basis, the exact same. Well, why would I go with a company that has 1/12 of the size of a dividend of a company that has 100% of its dividend at a 5% yield once per year? So it always comes down to the numbers. If everything being equal, I would still take the quarterly, because quarterly is consistent. It's into my Rolodex, so to speak, or on the merry-go-round, and every 90 days comes around.
Okay, James, I understand what you're saying, but from that logic, you could also then you could argue for picking a company that only pays dividends 2 times per year, 1 time per year.
Correct.
But you said you prefer a company that pays 4 times per year.
Correct. Because 4 times.
So will you explain that, and you don't take the company that pays out 1 or 2 times per year?
All right. So we have 266 trading days in a year. Okay. 13 weeks. 13 weeks in a quarter. So week 1, week 2, week 3, all the way up to 13. Okay. So the roster or the Rolodex, however you want to look at it, or when I played little league baseball, the coach would always say, "All right, you're up first, you're up second, you're up third, blah blah blah," and you're what do you call it? Um,
Base.
no, because the person that was up fourth was called cleanup, because he was thinking hypothetically speaking, person one, two, three get on first, second, and third base, and the fourth person would be cleanup. So hypothetically speaking, if they hit a home run, bring all four people in. That's what it looks like. So if you're putting your stocks into a calendar, right? And I'm looking at companies that consistently pay every single quarter. So let's say hypothetically, Hewlett Packard pays week number 6 of the quarter. Okay, great. Well, week number 6, I'm looking forward to looking at Hewlett Packard. Well, if they only pay once a year, well, week number 6 comes around. All right, well, there's no Hewlett Packard this quarter. Well, there's no Hewlett Packard next quarter. No Hewlett Packard. It just, for me, it makes it easier if everything is consistent. Consistency, predictability, safety, all those kind of things I like. That make sense?
Yeah, but I really didn't get it. What's why you favor 4 times than 2 times? I might be a little bit slow. I apologize.
No. If everything being equal, you are correct.
Yeah.
If I was going after the dividend, I'm not going after the dividend, because if it has a 5% yield, it pays once per year, it's going to be a larger dividend than if it's a 5% yield and it pays every month. That's 12 times. It's still 5%. The number doesn't change any. They're just cutting it up in more slices. But
Yes, I know that you're not out, chasing the dividends, but you just want to have the dividends as a cushion if you don't lose your shares, and you also want to use the dividends as an easier way to lose your shares, because you said that if you have a dividend, then the share price increases, and that increases your probability of losing your shares. So you only collect the premium.
well, ideally, I'd like to just collect the premium, on a weekly basis. But if you have, like I said, if you have a dividend stock that pays once a year, it kind of throws things off, because you got 4 quarters and trying to keep things even and keep things running repetitively. Is that correct? So if everything's the exact same week after week, month after month, quarter after quarter, and all of a sudden you have 1 or 2 companies that pay once a year, say, wait a minute, where did this company come out? Well, I didn't do this one last quarter. It just makes things easier if everything's the same.
Okay. So and I assume, I don't know how it is in Europe, in the US, but so is it most common that the most companies pay 4 times per year?
Yes, most companies pay 4 times per year.
Okay, so let's say if it was most common that they paid 12 times per year, then you would go for that.
Well, if that was the norm, yeah. But the norm is the norm, or the normal way of doing business is every quarter.
Okay, but in Sweden, the companies only paid 1 time per year.
Well, now I don't know a lot about European options, but I do know you can only exercise them on the date of expiration. That much I do know.
That's good.
How a Swedish company stock price is affected by its dividend, and is it affected, a week before, 2 weeks before, 3 weeks before? What happens after the dividend's paid out? Does it go down? Does it go up? I have no idea whatsoever on the stock markets around the world. I just know the U.S. stock market.
Yeah, I get it. And I have to try to fix that so I can trade the options in the US, because then I have more companies to choose between also, because it's a bigger market.
That is true.
Okay, James, that was all. Thank you for giving me
All right.
the time. I do appreciate it.
All right.
Kind of you.
All right.
Have a great evening. Take care, buddy.
Okay, have a good day.
You too.
Okay, what do I think of Ford and Spirit Airlines? Okay, Brandon, let's take a quick peek at Ford, because I do like Ford. Uh-oh. What just happened? I missed a bunch of questions. Sorry, I got to go back and take a look at these questions. Okay, your thoughts on AMD? Hey, Doc's here. AMD, isn't that Advanced Micro Divisions? AMD. It is. Interesting. Now, isn't AMD one of those companies we looked at before and they're not paying their dividends or something like that? All right, so let's go take a look at AMD into the Yahoo Finance because we want to see exactly what is going on. AMD. All righty, now here we are. Yahoo Finance, look right behind me. First thing I want to see is historical performance, and I want to check and see how their dividends are being paid. This is probably why we don't like AMD. AMD, there are no dividends in the selected time period. Oh, that stuff is horrible. It really is. Sorry, AMD is going to be no. Sorry, Rain Man. Darbenly, is everything is as simple as it sounds? How long will it take for someone to master it from you? Well, Darbenly, don't take this the wrong way and try not to get insulted. All right? You like the way I prefaced it? I'm trying not to get insulted. This trading strategy that I'm teaching here, that I'm actually giving to you for free, was created for a 9-year-old little girl. Now, if my 9-year-old little girl could get it and understand it, I'm going to actually show you because it's one of my favorite things to do.
Hi, I'm JC, and I'm a 10-minute trader. In less than 3 minutes, I'm going to teach you how to make more than the average bear. There are 5 keys. Key number 1, there are 156 companies paying over 10% yield this year. There are 250 trading days.
Okay, now, I love my daughter tremendously, really do. She wasn't a Mensa student. She wasn't an honor roll student. She was your everyday, average, ordinary, normal little girl. At 9 years old, she asked me to teach her how to trade. So I had 5 criteria that I had to figure out. Number 1, simple, safe, predictable, consistent, and no way that she could lose. 9-year-old little girl, you don't want her to cry because if she cries and she loses money, I'm going to feel like crap. Mama gets involved, I'm sleeping on the couch. It's not a good thing in the homestead. Nope. So, simple, safe, predictable, consistent, and no way to lose. There you go. 5 rules. Rule number 1, never buy something you do not understand. If you cannot give me a 10 to 15 second elevator pitch as to why you're buying it, why you're getting into it, where you're getting into it, where you're getting out, and what you plan on doing, don't buy it. If you don't understand it, don't buy it. And if you are going to buy it, make sure you're going in with the mentality or the thinking that you're going to hold it for the long period of time. Because you just might have to. Because stocks go up, stocks go down. Now, don't kid yourself. You are going to buy something and it is going to go down. On the flip side, you're going to buy something and it is going to go up. It's a 50-50 shot. They go up, they go down, they don't do anything else. They go up, down, up, down, up, down, up, down, up, down, so on and so forth. That's all they do. All right. So, if you think that you're smarter than a 9-year-old, well, then this should be relatively easy. So let's go over the 5 rules. Rule number 1, never buy something that you do not understand or you don't want to hold on to. Rule number 2, never sell at a loss. It defeats the purpose. Rule number 3, make sure the company is consistently profitable. Now, I like 20 years of increased dividends. It's the shortcut to tell me if a company is profitable or not. Because you get 2 different kinds of companies. One takes the money and puts it back into the company for capital growth. If you're looking for capital growth, if you're looking to go from $1 or $2 up to 10, 20, 30 to 100, yeah, you're in the wrong place. This is not it. This is slow. This is boring. This is repetitive. Mundane. I think we throw mundane in there also. We're only looking for a safe, predictable, consistent 1% per week. That's it. Now, rule number 4, make sure the company has weekly options. And the reason why I want weekly options is because I want weekly cash flow. I grew up in the 60s, 70s, and 80s. Okay, in junior high school and high school, I get a job. I would go to work at 8 o'clock Monday morning, and I'd get paid 4 o'clock Friday afternoon. I'm used to that kind of a schedule. So what do we do with the stock market? Well, it opens up at 9:30 Monday morning. Great. It closes at 4 p.m. on Friday afternoon. I want to be in on Monday morning. I want to be out on Friday afternoon, and I want to get my 1% safely, predictably, consistently, all that kind of nice, neat, fun stuff. So, hopefully you can get it from there. And rule number 5, okay? Rule number 5 is make sure all the numbers work. Let me quickly go over with you what do I mean by the numbers. First of all, it's got to be weekly options, because weekly options, I can do it every single week. Monday, Friday, Monday, Friday. I don't have to wait. I'm not looking for capital appreciation. I do not have the time. I do not have the desire to put $5, $10, $15, $20,000 into a company and wait years for it to go from $2 or $3 all the way up to 20 or 30 or whatever. I don't have the time nor the patience. I'm 60 years old. I am retired. I do not want to have to go back to work. Don't get me wrong. I do enjoy working, but I like working on my own terms. I show up when I feel like it. I do my job and I leave. That's it. I don't punch a time clock for anyone. It's a wonderful feeling to have freedom in that aspect. Let's go to the next question. Why is there a yearly cap on Roth IRA contributions? Sorry if it's a dumb question. It's not really a dumb question, but it's a question that I really can't answer for you. Okay, the only thing I can think of is the IRS or the federal government wanting to get as much money out of you as they possibly can. That's the only thing I can think of. All right. Poo-poo pee-pee hands. When you buy dividends, do you sell them right after you pay out and then rebuy? Well, a little bit confusing with the terminology in which you're using. Because I don't buy dividends, I actually buy the stocks, and then I sell covered call options against the positions which I have. It's called a covered call. But I don't really understand that one. Who's that one? Sigmal, how you doing? Julie, how are you doing today? Hey James, how about K? Uh-oh, who the hell is K? Kellanova. Well, number one, it's going to be a no real damn quick. Look at this. Gap up, and it's at an all-time high. Yeah, no thanks. Especially when it's going from, what, 52 up to 80. It's a $30 increase. That is... Sandy, how are you doing there, Miss Sandy? So I really don't know anything at all about this company. So let's go jump into Yahoo Finance and find out what kind of dividends this K company actually offers. I'm good. Glad to hear it, Miss Sandy. Dividends only. Cool. All right, so K, how far down did they go? Holy cow, look at all these dividends these guys have been paying. Holy shnikey. All right, so they've been paying dividends since 1973, but here's the thing. From 73 to 85, they paid nothing. Okay, so in 85, it was 5 cents. 86, it was 6 cents. 87, it was 8, then 9, then 10, then 11, then 12, then 13, then 15, then 16, then 17. Nice increase. Consistency, nice. 20, 21, 22, 23, 24. Uh-oh, here we go. In 2000, okay? In 2000, we're paying 24-cent dividend. 2001, it's still 24. 2002, it's still 24. 2003, 24. 2004, 24. 2005, 24, then she goes to 26, 27, 29, 32, 35, 38, 41, 43, 46, 47, 49, 51, 53, 54. Okay, so 2019, it was 54. 22, for 3 years, it was 54, and 55, and 56. Okay, it's not the greatest in the world, but let's take a look at the numbers anyway. Not the greatest in the world. All right. Look at the last 30 days. Where are we? Right here. All right. I have no idea what this is telling me whatsoever. 30 days ago was a 30-day low. See, one gap up, that's going to fill eventually. Here's another gap up, that will fill eventually. We're at 80 bucks. So it went from 56 to 80 in 30 days. That's more than a 50% increase in 30 days. Do you think there's going to be profit taking eventually? Well, hell yeah, there is, in my humble opinion. Seasonality, what does this thing normally do? Normally, look at this, she peaks right about here. See that chart? Okay, here's a normal chart. Okay, the blue line represented by this year. The red line represents 10 years worth of average movement. Look at this right there. Okay, this area right here where she shoots up is exactly where it is now. Now, from there, it's going to start sinking for the rest of the couple of weeks. Now, is that guaranteed? No, but you can't really mistake this for anything else. Look at it. From here, it's just going to go down. Okay, $80.88. The 81 is going for 0. Yeah, that's not worth it. Sorry, the numbers just don't work. All right, Julie, Kohl's has high premiums this week. Hey, Joy, thanks for the roses. This week, due to earnings, you jumping in? Kohl's. I think I already have Kohl's. Hold on a second there, Julie. Let me just get rid of this. All right, I got Kohl's here. I got Kohl's at 23.23. I sold the 21s. I sold the 20s. Well, it's at 1987 and I sold the 20s. So yeah, I have to get out of this one. All right, here we are right here. Here's your 30-day high. Here's your bottom. She goes up, down, up, down. Now she's going back to the upside. I sold the 20s. That's at 1997. I got to get rid of that thing. Knock you out. Haven't heard from you in a while, brother. How are you doing? Okay. All right, so Julie, I do have Kohl's here. I have Kohl's here. 2050. Ooh, and I sold the 2050s. Cool. No Kohl's there. So out of the 3 accounts I share with you, I have Kohl's in 2 of them. The third one, I don't have any Kohl's. But here's the thing. One account is doing very nicely with Kohl's. The other account is just a little bit off. Okay. Flipper, at what point do you feel a company is not paying a fair or too low dividend? Well, Flipper, it's not whether or not the amount that they're paying is fair or not. Now, when I'm looking at a company, I'm looking at consistency of increasing dividends. Okay? So if you have 20 years of increasing dividends, well, every year it should go higher and higher and higher. After 20 years, it's kind of a moot point of the size of the dividend rather than the consistency of its increase. That's absolutely horrible shit. Ugh. EVRG. What the heck is EVRG? That's never a good sign when I say EV. What the heck is EVRG? EVRG. Evergy. Yeah, that's going to be a no. It's a monthly optionable stock. Now, guys, come on. I asked you very nicely. 20 years of increased dividends, and weekly options. Monthly options don't do me any good because it's always a no. GD, you want to look at Hess. How about just HES? All right, well, there's Hess right there. It is a weekly, all right, and I do know who Hess is, and I do invest in Hess once in a while. A year ago, wait a second before I do that, here's our high, here's our bottom, this is where it was, this is where it is. See, our highs here, bottom, high, low, was, is, and direction. Right now, it's at 138. The 139s are going for 35 to 155. That's a big spread. Okay, you might be able to get your 1% out of it. But look at the size of the spread, 35 cents to $1.55. I hate it when the market maker does that. All right, so a year ago, 152, topped out at 168, bottomed at 130. Here's your last 30 right here. The high, low, where was it? Where is it? What direction is it going? Look at that nice movement. And you still got plenty of space between 140 and the high at 154. That's still $14 more to go before it even ties with the 30-day high. That's a lot of space. So the 138, if you can get it, fine. I'll write Hess down. All right. It looks like September has slim pickings. Okay. Bama Redneck cleanup. What the heck is cleanup? Wow. Cleanupcorporation.com. It has no options, dude. Come on. You've been here long enough. You know that one. Mama said knock you out. Wants to look at Nike. NKE. I like Nike. All right. First things first. High, low, was, is, direction. And it's 84, 24. So we're looking at the 85, 69 to 71. That it just ain't making it. The 84 is going for 115. You take 24 off of that. The 84 is going to give you your 1% here. The 85 is not, but the 84 will. All right, fine. Let's take a look. A year ago, Nike's at 99.77. At the end of the year, she was at the top at 123.50. Okay, looks like we have some. All right, well, there's the bottom right there on the 5th. All right. Well, Nike does not look favorable at this moment in time. 30 days ago, we're at 72. She went up, pulled back to 71. Now from 71, she shoots up, up, up. Look at this gap right here. That's going to fill eventually. So she's now here at the high of the month, or the high of the 30 days. Well, if you're going to go from 71 to 84, that's $13. That's just shy of 20%. Okay? So, hypothetically speaking, that baby should come down, and Nike should look relatively decent in the next 2 weeks. So 2 weeks from today. So let's put Nike down for 2 weeks from today. Alrighty, I'm just gonna get my table in order. All right, not this week. Not, oh, look at this. We got Nike down for next week. No, not next week. The week after. NKE. Oh, it's already written down for 2 weeks. All right, so we're going to look at Nike in 2 weeks. More than likely, that's going to drop. All right, that being said, I don't think he has his main watch list up. I'm showing tons. For September, there's plenty of companies in September. Okay, Warren Buffett's list. Yeah, Warren Buffett doesn't have a lot in September. What do we got? Bank of America, General Motors, Kraft Heinz, Occidental Petroleum, Hewlett Packard, Boyd Gaming, Coca-Cola, Paramount, Mendeley's, U.S. Bank. I've never heard of this one. ITOCY. What is that, Warren? ITOCY. Itachu Corporation? Really? Itachu. It has no options. That's going to be a no. Even though it's on Warren Buffett's list, it's going to be a no. All right. Darbenly. Is everything is as simple as it sounds? How long would it make to master? Okay, you already asked that question once. Okay. Mastering the strategy, really not that difficult. Okay, you're looking for a decent company, number one. Never buy something you don't understand. That should be self-evident. Oh, I'm missing some. Look at all these questions. Holy shit. Here we go. EVRG, we looked at that one. The government don't want you to dump loads of cash in there because it's tax. Yeah, it's probably right. The government wants to get as much money out as they can. Hey, Mark, how are you doing? Is Coke a good buy now or should I wait? All right, Aldi, North Carolina Construction. Well, how are you doing today? Now, don't get me wrong. I love Coca-Cola. I think a couple of minor flaws with Coca-Cola. Number one, it's at the high of the year. All right, I don't ever buy at the high of the year because you're going to make most of your money buying low and selling high, not buying high and waiting for it to get higher. Okay, right now it's never been at 71. What makes you think 71 is a good price for Coca-Cola? Okay, but that's not it. At $70.81, the 71 is going for 36 cents a share. That's a 0.5%. Now, if you're okay with a 0.5% per week, that still comes to 26% per year and 0.5% per week. That's 50. That's a nice price. 26% per year. Okay, Bama Redneck. Yep, premiums. Yep. Okay, but if you like it, does not seem profitable. Yep. Bodo, good evening. ALB, Travis. Travis likes Abelmal. ALB. First things first. High, low. Where was it? Where is it? What direction is it going? It's going to the upside at this very moment in time. Let's take a look at the numbers really quickly. 89.80. We're looking at the 90s. The 90s are going for 143, 144. That's over 1%. Okay? What does that tell you? Actually, that's close to 1.5%. Ross. I don't understand. Rosa Ochoa. I don't understand anything you just wrote. Terribly sorry. All right. Over 1%. Let's take a look at the chart and see what it looks like. A year ago was the high at 203.62. The bottom was just recently. Let's look at the last 30 days. Here we go. Last 30 days. 30 days ago, we're at 92. Jumps up to 100. Drops down to 72. Can you imagine that? From 100 to 72, that's a $30 drop. And then from 72, she jumps up to 92. That's a $20 increase. Those are big drops and big moves. Okay, so where do you think? Now, if you're an investor and you buy it down here in the 70s, now it's up here in the high 80s, low 90s, well, yeah, I'm going to get rid of it. I'm going to take the profit. Because the funny thing about profits, it's not a profit until you take it. And nobody ever went broke taking profits. Fred, GHSI, announced $5 dividends on the 9th. What do I think? Well, number one, GHSI, I never heard of them. Okay, that's number one. Number two, they have no options at all. So this looks like a purely speculative investment. And I'm not saying it's good or bad. I'm saying I don't do speculation. Okay? However, 6 or 7 months ago, it's at $5. Okay, now it just jumped up to 18. Well, and then there was profit taking today. Well, that looks about normal. He had a gap here. I know nothing at all about this company. I know nothing at all about this company. So I can't give you any opinion on it whatsoever because I don't look at companies. I don't know who they are. Okay, my number one rule is never buy something I do not understand. I don't understand this. Okay, we looked last week. There's 9,600 companies to choose from every single day. There are going to be some that go from $5 up to 18 in a couple of days. They're going to be there. But how do you find them? Okay, excuse me, I have no desire to figure that out. I'm at a point in my life where I want things a little bit simpler. I want consistency, predictability, safety, simplicity. That's what I want. All right. So, Fred Flintstone. That's funny. Check out X, an IYT U.S. Steel Transportation. Okay, now, I like X. The other ones I've never heard of. So, Fred Flintstone. I'm kind of curious. I'm assuming you're named after the Fred Flintstone from the Flintstones. Okay, so here's a question for you, a trivial question. I want to see who gets this because it's not something widely known. Now, the TV show, The Flintstones, okay, who knows the original name of the Flintstones? Because it wasn't Flintstones originally, okay? Who knows what it was? What was Fred's last name before they changed it? Because the first couple of shows, it was one name, but then they changed it. Who knows what the name was? And no, it wasn't Flintstone. But anyway, Hess may be a good one around dividend time. Premiums are weak. Okay, thank you. So my favorite divvy stock is ARLP. All right, ARLP. Alliance Resources. Okay. Stevie Ray. All right, so Stevie Ray, ARLP, you say, huh? Well, number one, I don't like it because it is a monthly optionable stock. What does that mean? That means I can only do a covered call once per month, 12 times per year. Now, when I say I like weekly optionable stocks because of the payments, the cash flow is higher. Let me explain. 23.97. Currently, it's at 24.19. So let's take a look at the options coming up. The 25s are going for 15 cents a share. Okay, so 15 cents a share on a $24 stock. Let's get my calculator out because some people might not be able to follow this. All right, 15 cents a share divided by the purchase price, 24.19, comes to a grand total of 0.6%. That's a little bit over 0.5% for the month. Now, there's 12 months in a year, so at 0.5% per month, that's going to give me 6% per year doing covered calls. Okay, explain to me why you think 6% per year is better than 50% per year. Because I like weekly optional stocks, which I can do every single week. Now, another thing I do not like about monthly optional stocks, because here we go. 30 days ago, here's our high right here. Our bottom is right here. So it goes from 26 down to 22. Okay, nice run up. Don't get me wrong, this is a nice run up from here, from 22 to 24. Okay, fine. Now, a monthly optionable stock, where's it going to be in the next 4 weeks? 4 weeks is 20 days. Okay, this here is about 20 days, 4 weeks. 1 week, 2 week, 3 weeks, 4 weeks. Okay? So if I'm doing a monthly optionable stock, great. It's at 24.19 at the moment. Where's it going to be in 4 weeks? I can't figure it out because, look, this 4-week period, she was way up here at the high. She made a new low. Now she's going up. So what's going to happen in another 30 days? I honestly don't know. I don't like monthly optional stocks. They don't pay well and they're too unpredictable. Sammy, what if I buy a put in K? All right, more power to you. I don't do puts because they're a little bit confusing for a lot of people. Okay? I wonder if anybody answered my question yet. What was Fred Flintstone's original last name? What stocks are you talking about? Well, we were talking about ARLP, which is a no. Oh, this is options. I didn't realize. There you go. Oh, James, to be honest, I feel good dividend on Vale. Oh, V-A-L-E. V-A-L-E. Vale, tra-la-la. Alrighty, so here's Vale. First thing I always want to take a look at. Here's the high of the year. Here's the low of the year. That's where it was. This is where it is. Look at the direction it's going. That's a nice bounce up. Now, I like seeing this. Most people don't like seeing this, especially those that bought way up here. So you bought way up here, now it's down here. Yeah, you don't like seeing that because at 16 bucks, now it's down at 10. You just lost 16 out of 10. About 35%, something like that. All right. The reason why I like this is you're going to make most of your money buying low and selling high. You can't get any lower than the low of the year. That was right here in the beginning of August. So let's take a quick look. Before we do, let's take a look at the numbers. If I could buy it at 10.63, the 10.50s are going for 18. Lose 13 cents up. That ain't going to work. The 11 ain't going to work. Yeah, we're going to say no. The numbers just don't work. And I don't see what you think. Those look good. Okay, so let's take a look at Vale dividends because you said you like the dividends on Vale. V-A-L-E. All right, so 2002. Okay, started out at 6 cents, 4, 5, 6, 11, 17, 13, 17, 26, 30, 24, 33, 19, 58, 59, 44, 41, 14, 19, 10, 5. No, not at all. Okay, I don't know what joy. I don't know you and I feel bad for saying this to you, but did you check the numbers before you bought this? Look, it had a nice run, 2010, 2011, 12. 2012, it was 59 cents a share for the dividends, and it was consistently growing. Then in 2013, they started dropping. 44, 41, 14, 19, 10, 5, 15. And then went from 40 to 35 to 46 to 77 to 44 to 156 to 69 to 6. Yeah, honey, terribly sorry. I mean, before you buy anything, you should check the numbers. And I don't see why you think those dividends are good. Okay? Okay, so in March, it was a 55-cent dividend. Okay, it's a nice increase from November of 23, from 47 to 55. But August, it dropped down to 37. That's a big drop. All right. So I'm going to say no to Vale. Sorry, kiddo. I like consistency increasing. Now, there's over 300 companies that consistently increase their dividends. Why are you looking at a company that decreases their dividends? Okay, so if your company's decreasing its dividends, means they're less profitable than they were before, because the dividend is the portion of the profits given to the investors. Me, I like consistently increasing for 20 consecutive years, because that tells me that they have, they got their shit together, so to speak. You know, so this year, great, they're doing better than last year. Next year, they're going to do better than this year. That's what I like, consistently growing, consistently going to the upside. All right, Ron, go daddy. All righty. If company makes good ROI, I'd rather have zero dividend. Explain to me in a manner in which I will understand that why you would have zero dividends. Okay, if you like good ROI, if a company makes good ROI, I'd rather have 0% dividends. That makes no sense to me whatsoever. Think about it. There's two kinds of companies: kinds that increase their kinds that share their profits, and the kinds that don't share their profits. So this channel here is basically for cash flow, not for capital appreciation. So when you say if a company makes a good ROI, I'd rather have 0% dividends, well, if that makes no sense at all. Seriously, dude, it really doesn't. Okay, either the company's paying a dividend, which means they're sharing their profits, or they're not paying the dividends and they're taking all the profits and put it back into the company. If that's what you're looking for, you're definitely in the wrong place. This is not capital appreciation. This is cash flow. We're looking at dividend stocks that consistently increase their dividends, and we're looking to use covered calls in conjunction with the dividend capturing. Okay, dividend capturing and covered calls to come together to do what I call dividend capturing 2.0, where I buy a good quality stock, sell a covered call against it just before the dividends paid out, consistently increasing dividends. Those are the only companies I want to look at. There's 9,600 companies. How do you choose? My biggest holder is ticker O. Oh, Brett, I feel sorry for you. Now, Brett, let's pick on you for a little bit because you like O and I can't stand O. Well, number one, it's at the high of the year. No thanks. Number two, it's a monthly optional stock. The numbers just don't work. Currently, it's going for 61.77. The 62s are going for 55 cents. That's less than 1%, and I got to hold it for 4 weeks. So I'm getting 0.25% per week, or 1% per month. That's 12% per year. Explain to me, as if I was a 3-year-old, in what world does 12% better than 50%? Okay? But it gets worse. Hold that thought for just 1 second. So let's go on over to here and put O and find out that they do not increase their dividends at all. 2022, 25 cents. 2023, 25 cents. 2023, 26 cents. 2024, 26 cents. There's no increasing whatsoever. It's all basically, well, it's a little bit here and a little bit there. Not much. But here's where it gets worse. Sorry. All right. Now, Brett. 5.1% yield. I could take my money and put it into the safest investment, and that is a government bond. They pay 5%, and I don't have to deal with any of this crap. Okay, 5.1%. How can 5.1% be better than 50% per year? That's something I have a hard time wrapping my head around. There's a $5 dividend on GHSI, the 9th, and it's only 13 bucks a share. Is this good? Absolutely not. The reason why do you think they have a large dividend? Okay, let's take a look at GHSI. GHSI. Wow. Let's look at the dividends only. Well, there are no dividends at all this selected time period. So my assumption that $5 dividend you're talking about is going to be the very first dividend they pay. Okay, now they have no history whatsoever in paying dividends. All right, GHSI. No options. Okay, company's never paid a dividend before. It has no options, and it's just a no. And you know what, Fred? If that's what you like, absolutely fine. I don't tell people what to invest in. I really don't. But I sure as shit wouldn't do it. D D D D D D D D D D D D D D D is a no. Who said that one? Apple user. Okay. Kevin. Hi, can you break down one of the stocks you bought today and why? Oh. All right, let's take a look at Dell. Now, I grew up in the 60s, 70s, and 80s, so certain things I know and certain things I don't. So I don't buy things I don't know, I don't buy things I don't understand, and I don't buy things I've never heard of before. DDD, never heard of them. And HCIS, whatever that was, I looked at a minute ago, never heard of them. I've heard of Dell. Okay, I've actually owned Dell computers, so I understand them. The chart, here's the high, here's the low, here's where it was, here's where it is. It's currently at 111. It was at $50 a year ago. It jumped up to 180. She had some profit taken. Now we have a little bit of retracement. Fine, I like that. Now let's take a look at the numbers. Currently, the 111.65, the 112 is going for $6.50. So let's get the calculator so you guys can actually see that. So if the current price is $111.65, the closest strike price is going to be the 112. So if I buy it here, I sell the 112, so somebody can buy it from me at 112. They are going to pay me $6.50 a share. So $6.50 a share, dividing it by the purchase price, which is $111.65. That gives me a grand total of 5.8%. 5.8%. Now, I'm not quite sure about you, but 5.8% for 1 week on a company I know and I like and I have no problem owning, it was a no-brainer for me. But we're not quite done yet. Look at the last 30 days. Okay, here's the last 30 days. 30 days ago, 116, drops down to 88, shoots back up to 111, so you got a little bit of space right there, but I have no problem buying it at 111. And Dell has excellent premiums. Look at them. At the money, it's $7. One strike out of the money, it's $6.50. Two strikes out of the money, it's $6. Three strikes out of the money, it's $5.60. Four strikes out of the money, it's $5.20. Nice premiums all the way down. So if the stock drops, well, I'm still getting nice premiums. Okay, I like Dell. So hopefully that makes up. How do you get... Oh, who got that right? Charlo got it right, and Flo got it right. Flagstones. Yeah, you're right. Flagstones. I had another good one for you. Let's go back. Duke, here we go. How do you get started, Inc., this type of trading? Do you offer a beginner program? Well, of course I do. It's in the bio. Duke, Stand Up America, Duke Energy. DUK. Now, I haven't bought DUK before because it's a monthly. I mean, I've looked at it many times in the past because people ask me to look at it. But the numbers never just work out. At 113, the closest one's going to be the 115. It's only going for 70 cents. And the 110 is closer, but it's going for 3, but I'm losing 2 something. The numbers just don't work with monthlies. Cleanup was not in reference to a stock. Well, Bama, believe it or not, cleanup is actually a stock. All right. Dino, good evening. Why is there a gap in some of these charts? And how and why does it feel? Okay, I don't know what you mean by how and why does it feel. Phil. Oh, gap in the chart. Oh, okay. All right, you mean a gap, kind of like this right here. All right, so you're relatively new, so let's do this. Now, every single day, we have a bunch of numbers that we want to look at. Okay? The opening price, the high of the day, the low of the day, the close of the day, the volume, how many shares traded, the bid, and the ask. The bid is what I can sell it for. The ask is what I can buy it for. These numbers are created by you and me. All of them but one. Okay? Now, this number here, the open, there's one person and only one person who's in charge of that number. That is the market maker. The market maker will wake up one day, and if he's in a good mood, he will put his opening price wherever he feels like it. If he's in a bad mood, he'll put it wherever he feels like it. It's the only number that's actually created by one person. But the high of the day is created by you and me, because we decide what is too high and we decide what is too low. So the high of the day is created by us. The low of the day is created by us. The ask, wait a minute, no, that's by the market maker. The high, the low, and the close is us. Okay, me and you. We are the buyers, we are the sellers. We decide what's what. But the beginning of the day, the opening of the day is created by the market maker. Now, here, some strange reason, the market maker opened it up here and we decided to close it here. So the very next day, the market maker pushed it all the way up and he created a gap. That's all it is, either gap up or gap down, and the market maker is the one who does that. All right. Next, Stand Up America. Duke Energy is a monthly. Yep. Dino, maybe the time and night. I've seen it before. What do you think Global X a good business to invest in? Okay, Deandra, I have no idea what you need to be more specific with that question. What do I think Global X a good business to invest in? Global X, I have no idea. I know what X is. See, X could be confusing because Twitter is now X. However, the ticker symbol X is for US Steel. And US Steel is a great company, but I'm not quite sure if that's the one you're talking about. Hey, it's a lady in construction. Okay. Aldine, North Carolina Construction. Wait a minute. Aldine Construction. Okay, fine. I have no problem with that whatsoever. Deandra, airline. Okay, Deandra, you have to be more specific. Okay, I actually need a ticker symbol or a stock name. Okay, Charles, can one use FinViz to screen for criteria that you specify? No. FinViz will allow you to do a lot. Let's just go take a look at FinViz. Because FinViz will take you a lot of stuff you can look at, but there's certain things it won't look at. Okay. Okay, so here we are back at FinViz. Now, FinViz will tell you a lot of information. What I am looking for specifically to point out to you guys, this number right here, 9,596. That's 9,600 companies to choose from any day. Now, up here is descriptive information. The exchange, market cap, earnings date, price index, dividend yield, average volume, average target price, sector, blah, 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 blah. All that kind of nice, neat, fun stuff. What I am looking for specifically in the stocks that I trade is consistent increased dividends. Can I find it here? Well, I can go right here to dividend, but it only allows me to take a look at the yield. It doesn't give me the parameter in which how often have they increased their dividend. So if I change this and I do over 3% yield, well, now there's 2,500 companies to look at. Okay, what else can I do? Well, I can also come over here, over to this side, wrong side, over to this side, and see if it has options or not. Because I want weekly cash flow. And for that, I need weekly options. So this tells me if it's optionable, but doesn't tell me if it's a weekly or a monthly option. So once I click on that, it's optionable. Well, now we're looking at 1,391 companies. There's a certain criteria that I like. Consistently increased dividends and weekly options. It doesn't have it. FinViz does not have it, but it does tell me a few tidbits of information. Damn it. All right, back to where we were. All right. Andrea Abelmal, that's the ticket I was looking for yesterday's TikTok. Abelmal. We looked at Abelmal earlier. ALB. Okay, we looked at Abelmal this morning. All right. Here's the high. Here's the low. Where it was, where it is. It's moving up. Right now it's at 89.80. The closest one's going to be the 90. And the 90 is going for 144 to 153. That's over 1.5%. Keep it real. Can you TSM? What the heck is TSM? That's never a good sign. If I say what the heck at Taiwan Semiconductor, damn it. All right, so Taiwan Semiconductor. Here's your high, here's your low, here's where it was, here's where it is, here's the direction that it's currently moving, and it is at 169.91, so the 170s are going for 355. That's over 2%. I like 1%. This is offering 2. Why? Well, let's go take a look at the dividends. What was again? TSM. TSM. Taiwan Semiconductor. Okay, so they've only been paying dividends since 2004. 2005, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18. All one per year. Now that's strange. 15, 16, 17, 18, 19, 20. Yep, and then they started going up. All right, so that's kind of odd. Okay, they paid once a year. 31, 38, 44, 50, 45. So it's going down. 47, 52, 50, 50. 73, 93, 116, 135, 128, 32, 41, 42, 43, 44, 50, 49, 45, 47. Okay, interesting. If you like Taiwan. Okay, so semiconductors. Okay, so let's go take a look at the numbers. All right, well, first off, it's going to be a no. It's too close to the high way up here. Okay, 30 days ago, we're at 160, drops down to 135, shoots on up to 175, pulls back to 169. The 169 is 91, the 170, 2%. So if you like it, that's a 2% trade. But look at where it is. She's getting ready to come down. So I'm going to put this up for 2 weeks from today. TSM in 2 weeks. TSM. TSM. They got nice premiums. Okay, they do have nice premiums, but look at where it is. At this moment in time, it's not a good bet. Roxanne, how are you? What do you think about T as a long term? Oh boy. All right, Elliot. Now, when you're saying long term, exactly what do you mean? First of all, it's going to be a no because it's at the high of the year. Right? If you're going to make money in the stock market, you're going to buy low and sell high. Well, let's look and see how many lows there actually was with TSM. All right, sorry, with AT&T. All right. So look back here last September. Okay, she went up, pulled back. Here's a low here. Went up, pulled back, a low here. Up, pulled back, low here. Up, pulled back, low. Up, pull 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 back. Why would you buy at a high when, hypothetically speaking, if she pulled back a little bit, like here, she went up, pulled back, you buy it at the bottom. Okay, she went up, pulled back, buy it at the bottom. She went up, pulled back, buy it at the bottom. Why would you want to buy it at the high of the year? That I don't understand. Also, at 1976, the closest one's going to be the 20. The 20 is paying 5 cents per share. That's 1/4%. So when you say long term, to me, long term is 30 days. How do you get started in this type of trading? Do you offer classes? We already said yes to that one. Redneck, can you elaborate on the strategy? I'm all ears. I'm new. Keep it real. The best thing I can tell you to do if you're new, just keep coming back. I'm here every single night, 9 p.m. to 11:30. Had another great week in premiums using your process. Awesome. Bo Randall knew what the Flagstone. So 2 people knew that Fred Flintstone's original name was Flagstone. Not many people knew that. How about Gilligan's Island? Do you remember what the original name for Gilligan's Island? Because it wasn't Gilligan's Island at first. Brittany, how are you, Miss Brittany? Okay, Flipper, bought Nike today, way over 1%. Why would you buy Nike today? Okay, Flipper, you've been here long enough. Okay, you actually been here long enough. 30 days ago, we're down here at 72. She goes up, pulls back on the 5th, was down to 71. From 71 to today at 84, that's at the high of the 30-day period. 84, yep, 115. You made your 1%. Cool. Nothing wrong with it. I mean, if you, cause the main thing is, do you like Nike at that price? Cool. Well, you got your 1%. Not bad. The prize is the 1% or better premium. Yep, you're right about that. All right, Charles, can you please do BSXL? Okay, Charles, I could say no now, unless you really want me to pull it up and then say no, because I've never heard of it. BXSL. Blackstone Second Lending. Yeah, it's a monthly. No. What was it again? BXSL. BXSL. All right. They only have 2 years worth of dividends, Charles. Okay? 2 years. January 22. 10 cents, 15 cents, 53, 20, 53, 20, 60, 60, 70, 70, 77. Okay, interesting, but it only has 2 years of dividends. Why the hell would you want to do that? Seriously, think about it. Okay, most companies don't make it past 3 to 5 years. This one, 2 years of dividends? Yeah, sorry. Gonna be a no. That's a no. All right. Progressing. What do I think of T? Just did that. That's a no. SO, Southern Comfort? No. ARCC? No. As a long-term hold. Elliot, I don't do long-term. And I don't know why you keep asking questions like that. We just looked at AT&T. The numbers didn't look good. SO, Southern. Okay. It's at 86. Okay, there's the high, the low, blah, blah, blah. 86.49. The 87 is going for 30 cents. Yeah, no. ARCC. ARCC. Monthly. No. See? I was right. No, no, and no. Flagstone. Mariel. Maria Laws 4. Cool. Flagstone, yeah. Elliot Morris 3. Those are all great companies, but here he discusses weekly cash flow. Thanks, Redneck. Okay, you got it? But if you like it, buy it maybe some outside the money covered call extra cash. Yep. All right, Mark Fisher. No, the original name of the Flintstones was the Flagstones. How do I sign up for this program? User 441. All right. If you come up to the bio in the top left-hand corner, you see my pretty little face up there. You can give me a good old tap on that thing. That will bring you to the bio. In the bio, you will get my information on how to contact me. You will also get information or going to my website. Now, let's get out of this one. How the heck did I get into that? Okay. The 10-Minute Trader. Okay, The 10-Minute Trader. If you've seen any of my videos, they all start out the same. Hey, this is James from Dividend Stock Talk. Brought to you by The 10-Minute Trader. Live trading online, right there. Okay, you don't like that? Slide down a little bit. Right there. Live trading. Join our morning trading group. Okay? Investing your own money shouldn't be difficult. Stop making it more complicated than it needs to be. I thought that was rather ingenious. Let's go back. BXSL. Charles, we looked at that. Uh-oh. All right, Charles, I looked at BXSL. Samron, I would like to join you and learn how do I do it. The10minutetrader.com. Mariel Law. Poseidon's Last Molar. Hello. Felix. Hewlett Packard also has over 5%. HPQ. Well, Hewlett Packard, here we go. Here's the high. Here's the low. Here's where it was. Here's where it is. This is the direction it's going. 35.71. The 36s are going for 118. That's a nice premium, 118. Let's take a closer look at the numbers. A year ago, we were at 31.15. Bottomed out in October at 20. What is that? 25.34. We topped it off at 39.49, and that was back in end of May. The last 30 days. Here's the last 30 days. 30 days ago was the 30-day high. Okay, and that was 36.75. A week later, or a week and a half later, on the 7th, that's our bottom at 31.95. Okay, nice run up, a little bit of pullback, continue to run up. It looks like she can continue, a little pullback going up. So we're at 36 at the moment, and the 36 is going for 118. So what does it normally do this time of year? Now, for those you don't know or haven't seen it before, this is what is called a seasonality chart. Seasonality chart starts January 1st, December 31st. The blue line represents the movement for this year. The red line represents the past 10 years average movement. This blue dot is today. I want to look at this area right here, and as you can see, towards the end of August, all the way into October, all through September. This thing goes down. So Hewlett Packard may look good, but historically, you can't misinterpret that one. Here's the blue dot. This is today. Here's where we are. This is 10 years worth of average movement going to the downside this time frame through the whole month of September. Is that guaranteed? Not at all. All it says, this is what it's done in the past. Now, the past doesn't equal the future, doesn't mean that. But if you think about it, what does Hewlett Packard do? Do they do anything new and interesting, or do they do the same business over and over and over again? Okay, is currently in an upward trend. Okay, and the numbers look favorable. 35.71 to 36 is going for $1.18. Okay, that's over 3%. Milton, what is the die for your Dell? What is the die for your Dell? Milton, I have no idea what that means. Keep it real. SPG is huge. Oh, bloody rotty then. SPG. There we go. SPG's a big fat no. 2 reasons. Reason number 1, it's at the high of the year. Reason number 2, it is a monthly optionable stock. At 168, the 170s are going for 175. That's for a whole month. That's only a little over 1% for the month, which means if I'm going to do a covered call on this company here, I'm going to get around 12 or 13% for the year. Yeah, no thank you. So your idea of huge, I feel sad for your significant other. Charles, BXSL is a no. DKL, more likely is going to be a no. DKL, again, no. Can one download Thinkorswim for free? Yep. You go to thinkorswim.com. You can download it for free. Was DHI good? Kellen, how are you today? DHI. DR Horton. Now, don't get me wrong, DR Horton's a good company. It's on Warren Buffett's list. It's always a yes for me automatically. However, for this week, it's at the high of the year. Okay? If I'm going to buy something, I definitely do not want to buy it at the high of the year. I would prefer to buy it at a low. See, she goes up, pulls back, up, pulls back. I want to get it here. Goes up, pulls back. I want to buy it there. I don't want to buy it up here. Because you're going to make the money in the stock market buying low, selling high. Not buying high and waiting for it to go higher, because it may never go higher. PBR paid me great dividends last week. PBR. Okay. All right. PBR. High, low, where was it? Where is it? What direction is it going? 15.65. The 16s are going for 8 cents a share. That's going to be a no. Sorry, the numbers just don't work. Milton, 1. Okay, ONE has no dividends. MCD, Mickey D's. Mickey D's was a good buy this year. A good buy this week. Alrighty, Mark. I'm going to disagree with you, but that's perfectly fine. I have been wrong once or twice. Mickey D's, here's the high. Here's the low. Here's where it was. Here's where it is. Here's the direction it's going at this moment in time. Okay? Currently, it's at 291. The 290 is going for 168. So if I bought at 291, sold the 290s, I'm losing a buck right off the top. I'm getting 68 cents on a $290 stock. No. Okay? Now, I'm not quite sure why you're saying it's a good buy this week. Or you could have been last week or the week before. or the week before, or the week before. Because you got your 30-day bottom over here, okay? And it's done nothing but keep going up. So I don't buy at the high. Sorry, Mark. Mickey D's is going to be a no. Bill Ward, are we going to crash before or after the election? Yup. Sorry, Bill, I really don't know. But I do know every decade we have a correction or a crash or whatever you want to call it. Now, we already had one at the beginning of the decade. The beginning of the decade was 2001. We've already had our crash. Are we going to continue going up? Don't know. But YouTube. Who said that? DSP, DSP, DSP. All right. Dino. What's happening there, Mr. Dino? DSP. I've never heard of them before. They're a monthly optionable stock, and monthlies are always a no for me because the numbers just aren't the same. What I'm looking for, Dino, is a safe, predictable, consistent 1% per week. In order to do that, I like to have weekly optionable stocks. This is a monthly optionable stock. The difference between the two is monthly optional stocks you can only do once per month, which is 12 times per year. Okay? Weekly optional stocks I can do once a week, 52 times a year. Now, I've been trading every single day for the last 20 years. It's part of my morning ritual because I know better than anyone else, nobody has more interest in my money than me. Okay? I do not trust those boys on Wall Street to be in my best, have my best interest in mind. They do not. Apple user, BXSL, tried privately before public conversion. It actually has a long, consistent dividend record. Felix, does SLB look good this week? Schlumberger, ooh. All right, Apple user, I appreciate your input, really I do. I love it when people interact and share their experience, all right? But BXSL, I've never heard of them. I have no idea who they are or what they do. All right, now you can put your money anywhere you want. Where I like to put my money is a company that I have heard of, a company that I understand, a company that is consistently profitable. Okay, so BXSL was traded privately before going to public. Well, that doesn't do me any good whatsoever. Okay, I still never heard of them. Kariba, I made $55 on a $300 SPY call. Is it a nice return? Well, yeah, it's a nice return. Hello. It would need to have weekly options to fit this strategy. Well, you're 100% correct about that one. When the market slumps, can you find 1% plus stocks that meet your criteria simply as you do now? Yeah. Okay, you seem to forget one thing, all right? Now, a lot of people have a tendency to overlook this because they think, hey, this is it, this is the way it's going to be. No, okay? Some of these companies are over 100 years old, okay? Coca-Cola's been around for 140 years. Consolidated Edison has been around for 200 years. What do they call those peace walks of the 60s, the oil embargo of the 70s, the dot-com bust in the early 2000s, the Y2K, Iraq, Iran, Afghanistan. There's a lot of shit these companies have seen, and they continuously increase their dividends. Okay? So if they're continuously increasing their dividends, well, that is a good company. Absolute worst case scenario. The reason why I like dividend stock companies, if and when the stocks go down, and they do. Okay, do you remember back in 2021 when everything crashed? Some companies lost 80% of their value. But you know what they didn't do? They did not cut their dividends to their shareholders. They still business as usual, continuously moving forward. All right. Jordan, can you filter Thinkorswim's calendar to only dividend stocks you would trade? Jordan, To be 100% honest with you, I have no idea how to use the filtering. Even if there is a filtering, what do you call it, apparatus on the chart, on the calendar, I honestly don't know. Okay, I take all my stocks and I import them. Hold on, I'm getting there. I import them through the watch list. Okay, click on this, and it says create a watch list. All right, I can create a watch list, I can name it whatever I want, and I can import whatever stocks I want. And once I do that, oops, let's get out of there. I come over to here on the calendar, that little gear right there. I click on that, and I come down here to personal. These are all my own personal lists that I personally installed into my watch list. Okay, so there's the 100-year-old companies, calendar spreads, different trading strategy, dividend aristocrats, dividend champions, dividend contenders, dividend kings, high volume stocks, my old list, I've been working on this list for over 20 years, Warren Buffett's list, and weekly optional stocks. Okay, there's a whole bunch of lists that I personally installed myself. So no, they do not have that, not that I know of. And they may have that service, I don't know. Win is not moving. When do you plan on selling it? Well, let's take a look at Win here for a second. WYNN. Hold on, I'm pulling this up so you can see it. Okay. Now, these are all the trades for Win, WYNN. So I originally bought it back here in May. Okay? I bought it at the market price and I sold. That's not what I want. That's what I want. I do not want this. That's order history. I want the fill history. All right. I originally bought it back in early May. 98. I sold the 98s, got $2. That's over 2%. The very first time I bought Win. The very next week, I got 121. Next week, I got 113. Next week, I got 15, 57, 27, 47, 3, 33, 19, 35, 56, 67, 42, 122, 19, 16, and 37. Those are all the premiums I've collected since I bought it. And also collected the dividends. So I have no intention whatsoever selling it. Every single week, all these red ones, I get a premium. Okay? Here's where I originally bought it. I dollar cost average down, and I dollar cost average down again. All right. Let's get back to where we were. All right. Wind's not moving. I have no intention on selling it. Blah, 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 blah. Milton Rodriguez, DYE. Now, Milton, it's never a good thing when I say I've never heard of it. Anti-government. I love the name. That's a cool name. Hello, and how are you today? All right. DYE, they can't find that symbol. Sorry, dazed to expiration. Milton, O-N-E. O-N-E. Thanks. Way to go, anti-government. Good name. O-N-E. No options. AMD. We already looked at that one. That's a no. Is there a place I can find the list of 300 companies you prefer to trade? Jordan and Company. You ready? Got a pencil, paper, crayon, mascara, chalk? Poke a needle into your finger and use your blood. I don't know. However you want to write it down. You ready? List number 1. What SPHD, sir? I have no idea what that is. Terribly sorry. SPHD. All right, you ready? List number 1. Go to Google. In the search parameters, you want to search Dividend Kings List 2024. That's 54 companies that have consistently increased their dividends for more than 5 decades. That's 50 years. Dividend Aristocrats List 2024. 67 companies that have increased their dividends for 25 consecutive years. Dividend Champions, 25 years of increased dividends, a little bit less stringent than the Dividend Aristocrats, but that's about 150 Dividend Champions. And then you get the Dividend Contenders. There's over 300 Dividend Contenders, and they've increased their dividends between 10 years and 24 years. And you can't forget Warren Buffett's Stock List 2024. Because if it's good enough for old Warren, it's good enough for me. That's my philosophy. Okay? Jordan, hopefully that should give you more than 300 companies to take a look at. U.S. Cocoa 127. I have no idea what that means. Government truth. Yeah, right. That's an oxymoron. Government truth. All right. Just for laughs, what do you think about DJT? Well, why don't you ask me that question in 19 more years? Okay? After they're showing 20 years of increased dividends. Guidance. Hey, James, everyone, hope you survive it today. Oh, I survived very nicely. Caesar, no dividends. Okay. My biggest question is taxes on stocks. Whoa, not live. What does that mean? Not live, or not live. Anyway, biggest question is taxes on stocks. All right, I'm going to tell you what I tell everyone else. Okay, if you're asking about taxes on your trading account, okay, you really, honestly, 100% need to talk to a tax strategist or a tax planner. Because if you have your account set up properly, okay, there should be no reason whatsoever that you pay taxes on your gains in your stock trading. Great job, done 90 minutes. Woohoo! Government truth is that tax accountant question. That's a tax accountant question. Yeah, I wouldn't say tax accountant. I would say tax strategist. But I do inside a Roth, so I don't have to worry. Well, that's a good idea too. You know, if you can convert your money into a Roth, you shouldn't have to pay taxes until you take the money out. All right, the government truth. He's live, just working through the comments. Yeah, it's tough going through all the comments. You know, because you guys are under the impression that you're the only ones here. You know, I got people over here, and here, and I can't do all the questions at once. The Dividend Champions, I can't forget that one. Can you set an alert for a Dividend EX day for stocks? I suppose you can. To be totally honest with you, I really don't know. Because I look at my stocks every day. And now that I'm doing this live with you guys, I'm looking at it twice a day. Okay, now last year and the year before, I only looked at it once a day. And it was like 10 or 15 minutes a day. Charles, I have downloaded Thinkorswim. How do I see the options chart you have up there? Cool. Mog, I appreciate you trying to answer us all. Thank you. Well, I'm trying. I gotta go back and forth. All right. Sometimes watch on YouTube to see the screens better. Well, the screen behind me is live on YouTube. The reason why it's live on YouTube is you probably can't see these numbers on your phone or your iPad. Okay? Visa. I asked last night, but we went off. Well, guidance. Let's take a look at Visa. I like Visa. Visa is on my list. So let's take a gander at Visa. High, low. Oh, that's a triple low, triple bottom. Cool beans. Where was it? Where is it? What direction is it going? 268 to 270s. They're going for 1 to 267s. Visa's not giving 1%. But if you like Visa, okay. Here's your top, 290. Here's your triple bottom at 228. Your last 30 days. Yeah, this is definitely going to be a no, dude. For me. If you like it, that's up to you. But 30 days ago, we're here. We shoot on up, pull back, shoot on up. It's at the 30-day high at the moment. I don't like the high. Hey, how are you? Let's take a look at the questions on YouTube. I missed some of them. Miri, how are you today? SPHD. I've never heard of SPHD. SPHD. Yeah, that's a monthly. That's a no. What about Nike? All right, Real Rob, we already looked at Nike earlier. It's at a high, NKE. Okay. It doesn't look like it's at a high, but take a look. Here's the last 30 days. Look where she is. Even where she is at this moment, the 84, the 85s are going 469, not quite, but the 84s will give you your 1% at 84. Real Rob, what are we looking at? VFC? Now, I bought some VFC this morning, I believe. Did I? Hold on a second. Hold on a minute. Yes, I did. I bought some VFC this morning at 17.10. And I sold it. Okay. Nope, not there. Nope. So I only bought VFC in one account. All right, so here's VFC. Here's your high, here's your low, here's where it was, here's where it is, here's the direction it's going. Lovely, lovely, lovely. At this current moment in time, 1770, the 18s are going for 24. That's well over 1%. You guys saying, how do you get 1%? Well, here you go. VFC is a good company. Okay? I only do companies that I enjoy and that I know and I understand. Never buy something you do not understand. Guidance, thanks a lot. You saved my axe. All right. So, Rob, let's take a look. Last 30 days. Okay, last 30 days for VFC. 30 days ago, 1650. She bottomed out at 1450. Tops out at 1875. Comes back down. Shoots back up. We're sitting here. She gets plenty of space to go this way because that's basically where she's going. If you like, and that's the question, do you like VFC? And do you like VFC at 1770? So let's take a look at the seasonality, see how long, see what it normally does this time of year. Okay, now here's the seasonality chart. Okay, it's going sideways to the upside. This is this year, this blue line. The red line is 10 years worth of data. We're right here. This time of year, basically going to go sideways. Well, let's zoom on in and take a look. Get that blue dot, left click, drag right. Basically sideways for the next couple of weeks. That's what I like to see. But that's me. You guys got to figure out what's right for you. All right, so BFC, blah, 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 blah. Carib, oh, no way. I've caught up with all the questions. Yeah! All the questions are done. Cool beans. Let's jump in and take a look at Pfizer, PFE. So we can go back to the list now. PFE, Pfizer. Here's the high. Here's, ow! Here's the, that was funny. Here's the high. Here's the low. Here's where it was. Here's where it is. This is the direction it's going. Right now, it's at 28.94, the 29s at 25, the 26, not quite 1%. Charles, how do you get to seasonality? Whoa, that's a good question. How do you feel about the month of September? Rob, I can't really give you an idea about the month of September because we're currently still in August. Okay, I know it's right around the corner next week. But I live one day at a time. I don't look in the past because there's nothing I can do about it. I can't look at the future. I can just get a rough idea. Because I'm at that point in my life where I get notices all the time. Joey died. Peter died. Wendy died. Billy died. All these kids I went to school dropping like flies. Okay, I try to live for the moment, try to have the best day I possibly can. and try to make sure when I'm gone, I leave something for my kids. So I can't tell you about September because we're still here. Charles, how do you get to the seasonality chart? Well, Charles, I hope you're paying attention. You ready? Over on your chart over here, where you put the ticker symbol in, right there, see it, PFE? You slide on over until you get to this right there. See it? Where it says chart style settings. So when you move your cursor over each block has a different label. Okay, chart settings, time frame setup, chart style settings. I click on that. This drop down pops up. I want to go to chart mode. Slide over. Standard is what you see all the time. Down the bottom is the seasonality. Now, once you're in the seasonality, it's very important to go up to the D. See the D right there? Time frame setup. Okay, I have my seasonality set at 10 years, 1 day at a time. Okay? Now, I can do 5 years 1 day, I can do 5 years 1 week, I can do 5 years 1 month, I can do 10 years 1 month, I can do 20 years 1 day, and 20 years by the month. Okay? You have to decide what is right for you. I like 10 years worth of data looking at 1 day at a time. Now, if I changed it over to 10 years monthly, uh-oh. What does 10 years monthly look like? Yeah, now, see, I don't like that at all. That's 10 years worth of data, but monthly. So I want to go back to 10 years. Daily, yeah, that makes more sense to me. But that's me. You have to figure out what's right for you. It's going to be different for everyone. Now, I teach one strategy. I teach the exact same over and over. Hollywood! Hollywood sewed up. Way to go. LA Sound Waves. Cool beans. All right. Heath Martin. Zim. I looked at Zim before. Andrea, Zim has no dividends. Thank you, Andrea. Now I don't have to look at it. But Uncle worked there. I bought and sold many times, but no. Ooh, 86 wants to look at Dividend Energy. DVN, now DVN is on my list. I bought Dividend Energy many times. It is a lovely stock. Okay. High, low, where was it? Where is it? What direction is it going? 45.14, the 45s are going for 55. That works. The 45.50 is not quite, but the 45s, yes. Guidance, SMCI. Didn't we look at SMCI already? Zim has no dividends. That's going to be a no. SMCI. Super Micro. Yeah. SMCI is a $500 stock. SMCI. All right. Also, it's a $500 stock, and there are no dividends in the time period selected. Okay, SMCI is going to be a no. Sorry, got here late after work. Have you done Dell yet? Yes, 86. We have done Dell. Let's do it quick. All right, Dell, 86. You ready? Dell. High, low, where was it? Where is it? What direction is it going? Blah, blah, blah. 111.65. The 112 is going for 650. 650. It looks very nice. Did we look at CC? All right. Kariba. Spiders is going to be a no. Kutchi. We already looked at Hewlett Packard. Okay. Hollywood. Why do you want to look at CC? Okay, interesting. Here's CC, here's the high, here's the low. That's where it was, that's where it is. This is the direction it's going right here. Currently at 2026. The 20s are going for 15. Sorry, Hollywood, the numbers just don't work. $20.26. The $20 is going for 15 cents. That's not even 1%. We didn't even, no, sorry. Sorry, Hollywood. Oh boy. IWM. What the heck is IWM? Yeah, that's going to be a no. Sorry, IWN's a no. CF, Consolidated Freight. 81, the 82s, yeah, no. Sorry. Flipper, you see it? 81, 89. 82s are going for 65 cents. That's not 1%. PSNY. Are you kidding me? PSNY. What the hell is that? Oh, I know what it is. It's a no. It's a monthly optionable stock. It's a no. It's $1. Really? Do you think they got 20 years of increased dividends at $1? Do you think CC hit the bottom? Okay, Hollywood, you're missing this right over here, dude. 14 bucks. There's your low of the year. Right now it's at 19. The bottom of the year is at 14. I'm caught up to all the questions again. Yuli went from 60 cents to $1 in 3 months. Check their potential. Get better, buddy. ULY. All right, so ULY, I'm under the impression by reading what you're writing and by you looking at, what the heck, PSNY? PSNY. Okay. Apparently, you like this. A year ago it was at $4. Now it's at $1. So it's dropped 75% in value. All right. Dropped 75% in value. The only thing I like about that, PSN. Uh-oh. PSNY. PSNY. Okay. PSNY, there are no dividends time selected period. Okay, so I have a little bit of an issue with people having me look at SOX. Okay, sorry, Marie, SOXL is a no. Sorry, it just doesn't fit in this trading strategy. Charles, yeah, it probably is. But when somebody asks me to take a look at something, ULY thinks I someone that I'm not. Number one, I don't look at this type of a stock. Number one, it has no dividends. How do I know if they're profitable? That's number one. Number two, I'm not looking for capital appreciation. Okay, when you're saying it went from 60 cents to $1 in 3 months, well, lovely, but that's not what I'm looking for. Okay, I'm looking for cash flow, not cash appreciation. There's a huge difference between the two. Why not IWM? It's a daily option. You can do it 252 times a year. Oh boy, IWN. IWM. IWM. Okay, so let's take a look at IWM and why is it that I don't like it. Okay, so in 2000, it started paying its dividends. 18 cents, then it went to 22. Then it went to 10, 14, 15, 6, 12, 13, 19, 8, 12, 19, 12, 10, 15, 13, 21, 27, 15, 20, 26, 17, 11. Do I really need to go on? They're not consistently increasing. All right, they're going all over the place. How about Siri? Ooh, Marie, let's take a look at Siri. S-I-R-I. So Kariba, are you seeing the dividends? 15, 16, 20, 27. Oh, that looks great right there. But it goes from 27 to 22. That's more than a 50% drop. Why the hell would I want to put money in a company that loses 50% of their profits? You got it from 11, it goes to 26. Okay, that's nice. That's more than double. But then it went down to 15, 36, 14, 18, 15, 25. There's no consistency whatsoever. What the hell are you thinking putting your money into a piece of turd like that? Just my opinion. Just my opinion. But let's see what kind of rate of return it gives. Oh, look at that. You got to be freaking shitting me. 1.1% per year. And you think that's good? Dude, you just got to leave, brother. Really. 1.1%. Hell no. VLO. Let's take a look at VLO. 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 Okay, so VLO, Valero Energy. Here's your high, here's your low, here's your a year ago, here's where we are now. Okay, this is the direction it's going. It's coming to the downside. All right, fine. 144 is the current price. The 144 is going for 1%. Lovely. There's your numbers. Okay, great. Let's take a closer look. A year ago, we're at 132. Bottoms out. Actually, we have a triple bottom. Check it out. We got triple bottom at 120. Where's that? October and November? Okay. At the top of the year at 184, and that was the beginning of April. Okay? Beginning of April. But from the beginning of April, it's been nothing but down. All right. Last 30 days. Okay, here we go. Last 30 days. 158 jumped to 168. That's a $10 increase. Well, you got your profit taken and brought us all the way down to 142. Up, down, up, down, up. See, it's still going up, but what is this? Is this an anomaly? Because this really is we call it unidirectional. It has a higher high and it has a lower low. So it doesn't really tell us which direction it's going. No, it's not telling us shit. There's that 143.09. But 143, looking at here, it's giving over 1%. Well, it looks good. What does it normally do this time of year? Normally, this time of year, well, look at that. Okay, from January to December, that's a nice steady move to the upside all year long. From January 1st to December 31st. That looks lovely. So, but this time of year, basically going sideways, not going anywhere, and I like not going anywhere for what I like to do. VLO, 1%, yep. GD, isn't PSNY penny stock? Yes, it is. Heath Martin, 86, haha. I've been collecting my 93, okay, good for you. Penny stock, Q, what do you mean that we can keep premium? How it works? No clues. Premium, I don't get it. My guidance, you don't get it, huh? All right, well, let's go to a decent stock. All right. VLO. Let's take a look at VLO and I'll explain to you what the premiums are. Now, hypothetically speaking, to do a covered call, it's one of the safest trading strategies that is. First, you have to own the stock. So you have to buy the stock first. At this current moment in time, VLO is going for 144 per share. Let's go here. Okay? 144 per share. Now, a covered call is where I would buy the stock and I would sell somebody a call option, giving them the rights, not the obligation, to buy it from me any time between when I sell it, when he buys it, and its expiration date. Now, this here has an expiration date of 30 August, which is this Friday. Okay? 6 September, that's next Friday. 13 September, that's 3 Fridays away. 20 September, that's 4 Fridays away. Okay? That's what's called a weekly option. I can do this every single week. So if I buy it at 144 tomorrow morning, I sell somebody the rights to buy it from me at 144, the exact same money I paid for it, Okay, what's the point in that, you ask? Well, at 144, I'm collecting $1.44 per share. That's 1%. So if the company stays exactly where it is, I make my 1%. If the stock goes up, I make my 1%. If the stock goes down, well, I still keep my 1%, but I keep hold of the stock. Say if it goes above 144, come Friday afternoon, on Monday, I'll have all my cash back plus that 144 premium. This is a premium. This is what I collect by selling a covered call. It means I buy the stock and I sell somebody the rights to buy it from me. Think of it this way. Let's say hypothetically, you stick your head out the window and you yell to your neighbor, say, "Hey Joe, I'm heading to the package store. Can I get you anything?" He says, "Yeah, pick me up a case of Miller." I said, "Okay, no problem." So I go to the store, I pick up a case of Miller. Let's say it cost me 20 bucks. I come back, and then my neighbor Joe gives me the 20 bucks, plus he gives me an additional, let's say, 2 bucks, 3 bucks for gas money. Well, that's kind of the same thing. You're buying something, 144, you're selling it for the exact same price you paid for it, and you're collecting, let's call it an inconvenience fee or whatever. What does the government call it? A convenience fee. Here you go. Here's your convenience fee. I'm buying it for 144, I'm selling it for 144, and I'm collecting 144 as the convenience fee, which is 1%. However you want to call it. It's called a premium. A call option premium. It's what someone else buys. It's like having a car in your side yard. Slap a sign on it, $1,000. Someone comes by and says, "Hey, I like your car. Let me give you $100. Hold it for me until Friday. I'll come back and pick it up. Give you $1,000 then. If I come back, I'll give you $1,000. If I don't come back, you keep the $100 and sell it to someone else next week." Same thing. Okay, guidance. Hope you got that. Heath, that's a solid dividend. Yep. Charles, oops. Charles, yes, blah, blah, blah. PICE, what the heck? Oh, PLCE. What the heck is PLCE? Well, let's check it out. PLCE. Okay. $6.30. Well, let's put it into here. PLCE. I want to look at historical data because I want to see how consistent they are with their dividends. Dividends only. There are no dividends in the time period selected. Okay, that means it's a no. Okay, hey, Eric Scott, PLCE has no dividends. It's not a company. I have no idea what that means. Charles, yes, if they're consistently increasing it over a long period of time. Okay, that's right. Marvel. Ooh, 86 wants to take a look at Marvel. MRVL. Marvel Technologies. High, low, was, is, direction. Currently at 69.20. The 69 is going 345. Nice. Gotta love it. All right, so a year ago, 54.55. Bottomed out in October at 46.41. Topped off at 85.76. And that was in the beginning of March. Last 30 days. Now, the reason why I look at the last 30 days, because it gives me an idea of where it is going next week. Okay? This is this week right here. This is last week. This is the week before, the week before, the week before. Okay, so went this way. She dipped. Went that way. Went that way. Okay, so where's she going now? Well, 30 days ago, we're at 68. Bottomed out at 53. Topped out at 72. Now she's coming to the downside. So what I'm going to do is I'm going to write Marvel down for 2 weeks. Because I don't think it's going to drop and settle within a week. MRVL. All right, so we'll look at Marvel 2 weeks from today. I see the message, account is not eligible to place trades within Thinkorswim. Charles, if you just downloaded that and you just opened it up, Yeah, you actually have to open up an account with Charles Schwab. If you just want to use it as a paper trading account, that should be fine. But when you're logging on, or I'll show you, when you're logging on to Thinkorswim, this is what's going to pop up. Give it a second. Okay, this is what pops up first. Thinkorswim, installing updates, technical support. Give it a few minutes while it puts the updates in, and then we will go from there. But until then, you can't do any real live trades until you actually fund it, which means you got to put money into that account. But as soon as this opens up, I'll show you, because at the bottom it will say live trading, and then it will say paper money down here at the bottom. Okay, so if you're just using it, all right, see it right here where it says live trading. Okay, live trading here, paper money here. Okay, so my suggestion, download it, do the paper money first, and practice. Practice, practice, practice. And when you get good at it, then put some real money into it. All right, what are we looking at next? Ooh, Kevin wants to look at Paramount. P-A-R-A. Okay. Here's a high. Here's a low. A year ago, today, and here's the current direction that it's going. 11.35. The 11.50 is going for 10. Not quite there. The 11 is going for 36. Losing 35. Yeah, no, the 11 is not going to work. The 11.50, you might be able to squeeze 1% out of the 11.50, but not the 11. Okay, so a year ago we're at 14.68. We topped off at 17.52, and that was in the beginning of December. Okay, the bottom was 9.61, and that was in the middle of June. Okay, so the last 30 days. Okay, here's your last 30 days. 30 days ago was our 30-day high. Way up there, 11.70. And she drops down to here, shoots up to here. I don't know if that's going to stall out or not, but you don't have much more room here, but you get plenty of space for it to come down. So I don't know. It may or may not be a good idea. All right. Thanks a lot. Wow. La, 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 la. Charles, he's using the paper trading amount part of the account to keep people from looking closely. It is. Okay, thank you. The part that when the price goes down, you still keep the stock confuses me. All right, Charles, I'm not quite sure why it confuses you. If the stock goes down, I keep it. Well, if the stock goes down, I'm not going to sell at a loss. That just doesn't. Okay, remember rule number 1? Never buy something you don't understand. Rule number 2, never sell at a loss. It defeats the purpose. Okay, we're investing not to lose money. So if I'm buying Paramount at 11.35, okay, and the 11s are giving me 36 cents, okay, nice. The 11.50s are giving me 10, delightful. But if the stock drops down, why would I sell it? I'll take a loss? No, thank you. I'm not here for losing money. Okay? Now, I think so far this year, I've had 2 or 3 losses. Hold on. Okay, let's do that. Account summary. Nope. Profit and losses. Here we go. Let's get rid of this. Okay, profit and loss year to date. You ready? Wynn Resorts. You can't count that because I still got it. AEO. Yep. As a loss there. I don't have it anymore. Kohl's. I still have it. Able Mall. I still have it. And so 2 losses. Bitto and AEO. That's it. Only 2 losses this year in this particular account. Now, let's get out of here. Where are we? Okay, this one here has 2 losses, Walmart and Ford. Okay, I own all those, Walmart and Ford. I lost $28 on Ford and $120 on Walmart. Other than that, all winners. Well, besides the ones that are down, but I still own them. This account here, no losses. Check it out. That one's cool. No losses at all on this one. Okay, see, profit and loss year to date, I still own it, I still own it, I still own it, I still own it. Other than that, no losses at all. Okay, so out of 3 accounts, I have 5 losses. That's it. And that's since January. Okay, I'm good with that. All right, what do we got left? Charles, one of the rules, never sell at a loss. You can make premium every week and a dividend. Yep, works for me. Brian, you want to look at advanced auto parts? Advanced auto parts. Here's the high, here's the low, here's where it was, here's where it is. Ooh, look at this big gap down. Ooh, I want to see that. Because I had advanced auto parts a couple of weeks ago, made a nice fat premium off of it. I'm kind of curious what's going on now. Right now it's at 49.11. 49.11, the 49s are going for 101. That's almost 2%. The 50s are going for 58. That's over 1%. All right, well, let's take a gander. What are we looking at? A year ago, 65.18. Previous bottom, 47.82. Okay, and that was back in October. Okay. Topped out at 88.56, and that was the end of March. All right, so the last 30 days, look at this, the last 90, look at that movement. Isn't that pretty? Look at that. Up, down, up, down, up, down, up, down. Now remember, I told you guys a long time ago, stocks go up, there's profit taking. Stocks go up, there's profit taking. Stocks go up, there's profit taking. Stocks go up, profit taking. If you don't take your profits, the market maker will take it away from you. So it goes from 62 and it drops all the way down to 48. Okay. So what does it normally do this time of year? This time of year, okay, basically just go sideways. So what happened the past couple of days? Now, my assumption, okay, would be yep, there's my assumption right there. Whoops, come over this side. Earnings report on the 22nd. See that? AAP, the earnings report. That's probably what happened right here. Now, what does the earnings report have to do with the company itself? Not a whole heck of a lot. Because people don't stop coming into work because the earnings went down. All right, Charles, paper account if you're not set up with Charles Schwab. Charles Schwab covered calls and collect dividends and strategies is the dollar cost average down, blah, blah, blah. I see the paper money trade, yep. Paramount likely going to drop a bit tomorrow. All right, Secretariat, I'm not quite sure why you think that, but let's take a look. What are we looking at? Yeah, Andrew, we already looked at Able Mall, Paramount, P-A-R-A. Now, why are you thinking that's going to drop tomorrow? Yeah, it looks like it could. All right, if you take a look at the chart, here's your high, here's your low. It shoots up. That's a nice run up. What was that? 1010 to 1130? That's over 10% increase. Okay, so there very well could be some pullback tomorrow. You just don't know. Because it has a higher high today than it was yesterday and the day before and the day before. A nice run up. Okay, so you just don't know. But we'll find out tomorrow. All right, we got a couple more questions. Yeah, missed. Here we go. Charles, pretty much selling the calls is the safest. They are betting it goes up. Okay. James, have you ever traded options on Hasbro? But of course I have. That was decades ago. But I don't do it anymore because it's a monthly. Now, years ago, when me and my daughter first started doing this, we do a lot of monthly options. And we do a lot of dividend capturing. Okay, now dividend capturing is where you buy the stock, collect the dividend, and then you jump on out. That was very profitable for us until we learned the weekly options. And that was just freaking crazy after that. So someone is willing to pay you a premium because they see more upside on your stock. Now, Charles, I have no logical reason, okay, why people do what they do. At this current moment in time, 68.88 is the current price. There's really no arguing with that. Okay, these are all strike prices, right? Let's change it from that to volume and open interest. Okay, so volume and open interest tells you a lot of information. So currently the stock price is 68.88. Okay, look at the call volume. The 70s, there's only 600 shares. 600 contracts out there. But the 67s, there's 1,500 contracts. The 65s, there are 2,200 contracts. Now remember, each contract controls 100 shares. Okay, so by changing what you're looking at will allow you to look at more information. More information gives you more insight to what people are thinking. Okay, and then you just go from there. Then you ask yourself, do I like this company at this price? Okay, here's the high, here's the low, here's where it was, this is where it is, this is the direction it's going. To me, right now, it's going to be a no because it's at a high at the moment and it is a monthly optionable stock. Thoughts on GHSI? You're like the third person who's asked for that thing. The first time I saw it, GHSI, first time I saw it was a no. Second time I saw it, it was a no. This is the third time I've seen it, and it's still going to be a no. Okay, it's a $14 stock that was at $5 a couple of months ago. Then it jumped up to $18. Now it's pulling back for whatever reason whatsoever. It has no options on it. I haven't even looked at the dividends. It's just plain out not for me. If you like it, great. William Lee, dude, I'm just getting ready to sign out. Bama Redneck, who's betting the price goes up? The buyer or me, the seller? All right, Charles, you're missing the whole point of the game. All right? Now, you've played Monopoly before, I'm sure. Why do you buy a certain piece of real estate? Well, because you think something. Why did somebody else not buy it? Well, they think something else. You can't control what people think. Now, if we're looking at Macy's, right now it's at $15.76. I like Macy's. I've been buying Macy's since January. See, I've seen all this crap firsthand because I was trading it as it did this. Now it made this drop. Well, I still have Macy's. I like Macy's and I'll continue to buy Macy's. But take a look at this. Here's the options over here. Let's get this over here. Okay, right now the stock price is 15.80. The closest strike price is going to be the 16. Well, the 16 is going for 17 cents a share. Well, that's over 1%. Now, I have someone buying it at 21. They buy it at 21, I receive 17. Because the difference between the bid and the ask, the bid, if I own it, I can sell it at the bid price. If I do not own it and I want to buy it, well, I'm paying the ask price. The difference between the bid and the ask. Think of it this way, okay? Let's say you go to the corner store, okay? Circle K, 7-Eleven, Quick Stop, whatever the corner store is. Everybody has a corner store. However far away it is, it's still the corner store. All right, so you go to the corner store, you walk in the door, and you go back to the milk, where the milk is, the refrigerator section, okay? Now, the person who owns the corner store, he buys that milk from a milk supplier, and he pays $3 for it. You come in and you buy that milk from him, you pay $3.50 for it. The difference between what the owner of the store bought it for, $3, and what he sold it for, $3.50, is his profit. So the market maker, see right here, the bid, 5 cents, the ask, 3 cents. So if I own the stock and I'm selling it, this is what I'm getting. Okay? Now, if someone, Steve from Cleveland, wants to buy that from me, he's going to pay the ask price. Do I really know who it is? Do I care? No. But the market maker, the guy who owns the store, he doesn't care. He's making the difference between the bid and the ask. Okay? This one, the bid is 5 cents, the ask is 8 cents. This one, the bid is 2 cents, the ask is 4 cents. The spread, the difference between the buy and the sell, goes to the market maker. Okay? All that being said, it is 11:33. Oh, wonderful day. You guys have a great day. We'll see you again tomorrow. Same bat time, same bat channel. All right, done over here on Facebook. Instagram. You guys have a great night, and we'll see you again tomorrow. Alrighty, you guys here on TikTok. Again, catch you guys tomorrow. I love ya.